So, good afternoon, everyone. Welcome to today's South India Business Week, Day 11 Masterclass track. So, for today's masterclass, we have Amit Patil, sir. Sir is the Faculty of Economy and Business at V School, Bangalore, and also SG College. So, sir is going to give us a fantastic talk about crafting success, which is very interesting topic, what everyone is looking for these days. Crafting success and mastering startup financing and pitch deck creations. So now I'm handing over it to you, sir. It's up to you.
Sure. Thank you, Lohita.
Thank you.
Thank you. So, should I send you the file before we begin, or should I just share it from my screen?
You can do the screen sharing there, sir. You'll
Okay,
have it
fine.
share.
No problem. No problem. Thank you. So, good afternoon to all of you. Thank you so much for joining my session today. It's a great pleasure and a great honor for me to be present as a masterclass speaker for SIBW session. So, thanks to SIBW's team for having me in the masterclass today. And my apologies for the delay.
You're stuck, sir.
Sorry, one second. One second.
Yeah, no,
Okay, sorry. The internet connection happens to be weak, so please feel free to stop me in between if you kind of feel you lost me. Yeah.
yes, sir.
Yeah. So yeah, again, just wanted to thank all of you for joining my masterclass today. It's a great pleasure and a great honor for me to be here amongst you.
We lost you there for a sec again.
Okay, sorry. Just 1 second. Let me just check my. Uh, 1 second. Hello, Lohita, can you hear me? Hello. Hello, Lohita, can you hear me? Hello.
Yes, sir. Till now, you were not audible and your screen seems to be off. Are you sharing your screen, sir?
Yeah, I'll just share my screen. I intentionally turned off my camera so as to allow extra bandwidth for the
Yeah.
internet. Yeah. 1 second. Cool. So I hope my screen is visible now. Hello. Hello.
Yes, sir. Your screen's visible.
Okay, thank you. So Lohita, I won't be looking at the chats because I have my slides on. So in case if you experience
If there
any
are any questions or any request from the students, I'll talk it to you. I'll read
thank
it
you.
out for you.
All right. Thank you so much. Thank you.
Thank you, sir.
Yeah. So first of all, very sorry for the internet connection. My connection sometimes tends to behave very funnily, so please bear with me while you are with me today. And please try to raise your hands or ask questions in case if you're not able to hear me properly or see the screen properly. So once again, I welcome all of you for today's session. This is particularly going to be about how to create a pitch deck for your startup, right? So, a little bit of background about me. I am a faculty of economics and business. I do two jobs. I work at V School in Bangalore, and I also teach at undergraduate college, SG College of Commerce in Belgaum, in my hometown. Right. So, two jobs in the sense. My first love is teaching, of course. Then my second job is working as a business consultant, where I have collaborated and worked with a lot of startup founders in their early stage of entrepreneurship. So I've been doing this since quite a while now. So I kind of feel that now is the right time to actually step up
Sir,
and
we actually
give.
lost you there. We only heard till your college.
Okay, sorry. Yeah. So let me just repeat again. So I teach economics and business at two different colleges, and I'm also a self-employed business consultant where I have worked with a lot of startup founders, particularly in their early stage of entrepreneurship. So my main job is to help founders, CEOs to identify the strengths and weaknesses of their companies and help them in their entrepreneurial journey. right? So as you can see from the screen, some of the things that I do, some of the business solutions that I offer is basically estimating the market sizes, right? Because whenever a founder comes to me with a particular business problem, I see that some of them do lack a little bit of clarity around what is going to be the market size for the company, right? And I have helped a few of the startup founders in creating proof of concepts, right? So these are some of the things that I've been doing so far since quite a few years now, and now I feel like sharing this wisdom, this knowledge with all of you, and as well as learning from you as well, because I believe the audience who has joined us today for this session, uh, I'm assuming that some of them are going to be startup founders. So hopefully, I will also leave this session learning something more, just like you did. Yep. So let me just clarify on a few of the things that we are going to discuss today, so as to make it very clear to our audience. So basically, we are here to discuss about how startups can raise funds, right? How startups can raise money for themselves, right? So I have kind of divided the session into three main segments, even though they might look a little less right now, but trust me, the slides are going to be very comprehensive and information packed. So the first stage, we are going to see what do we mean by a startup, right? Because people tend to have I have experienced through my work projects that people tend to have a misconception about what a particular startup is, right? And we'll also deep dive into different stages of startup, where I will reveal the kind of startups, the levels of startups that I've been working with so far. And then the main backbone of this particular session is how do you actually put content in your pitch deck, right? So these three will be the main concepts that we are going to study, right? Again, very serious disclaimer to all people who are listening, watching this session. uh, Please be reminded that this is not a professional financial advice, right? Because nowadays we are seeing there have been a lot of crackdowns on so-called financial gurus by the government of India. So this is not going to be like the Holy Bible or the Bhagavad Gita, whatever you would like to call, of startup financing, right? So you as an individual, you as a company, you are advised to do your own due diligence before taking financial advice from anyone, be it your brother, sister, friends, family, anyone basically, right? And second thing, as you can see from the screen, uh, hold on, please. Hello. Hello. Hello, Lohita. Can you hear me?
Please share your screen again.
Hi, Lohita. Can you hear me now?
Yes, sir. Yes, sir.
Yeah, I'm so
You are
sorry.
now.
The internet has been acting up really funny. uh,
Yeah, it's totally fine, sir.
yeah,
Uh, Please start from the
sure,
agenda again, sir. From
sure,
there,
sure.
we lost you.
All right, no problem. My apologies to the audience as well. Fine. So I hope you're able to see the screen.
Yes, sir.
Okay,
Screen
Lohita.
is visible properly.
Okay, thank you. That's great. So, just want to start over again by stating the agenda for today's session. So, we'll be covering three main important topics regarding the startup financing. As you can see from the screen, we are basically going to define what a startup is, because based on my work experience so far, I've seen that a lot of founders kind of have a very wrong impression about what a startup is. And then we'll discuss different stages of startup that a particular startup goes through, right? For example, we are born as kids, toddlers, babies, and then we go through different phases of growth are in our own lives, right? We then become teenagers, adults, and then we grow old and stuff like that. Thirdly, and the most important part of this session, is the content that you could put in your pitch deck to attract the most possible attention from investors, right? uh, so quick disclaimers regarding this session. So please don't take this particular session as a serious and professional financial advice, right? Because right now a lot of crackdowns have been going around within the government, where a lot of financial influencers are held accountable. So it is advised that you do your own due diligence before taking any financial advice from anyone, basically, right? And second of all, sorry, the content of this particular session is going to be based on a generic startup, right? You need to understand that you, as a startup founder, you have to adapt to your pitch according to your company's current situation, right? Maybe about your company's future goals as well, maybe about the investor profile as well, right? Slowly and steadily you will understand why towards the end of the session that we need to tailor our pitch deck accordingly, right? It is again saying in the same sense that we cannot necessarily apply with the same resume in different companies, right? Suppose if I'm applying for a job, let's say tomorrow at Reliance Foundation, right? So if I'm applying for a marketing role tomorrow, I cannot necessarily be using the same CV that I would use to apply, let's say, in McDonald's for a finance role, right? So we have to tailor our pitch deck as per our current situation, right? And last but not the least, I want to clarify that creating a pitch deck is a vast ocean of knowledge, right? You would require to understand huge number of things in order to create a good and appropriate level of pitch deck, right? So this particular session, unfortunately, is not going to be about the graphic designing aspect which comes in a pitch deck creation, right? So let us now quickly move on to the startups, right? As you can see from the screen, a startup is a young company, right, which is created to develop a particular product or a service, which is then brought to the market and which is then made irresistible and irreplaceable to customers, right? So the thing with startups in their initial phase is high cost, as you can see from the screen, and as well as limited revenue, right? So this kind of becomes a problem, because if you are kind of a startup owner who has a really passionate idea that you want to bring it to the market, who is very passionate about a particular business problem, and you want to solve people's problem, right? And if you're experiencing really high cost and limited revenue, then there is not really a great purpose to your startup idea, right? Which is why for this problem, the only solution that you can have, assuming that you've run out of all other options, is to get capital from investors, right? So pardon me. So the investors, as you can see from the screen, can be the venture capitalist, can be the angel investors, or crowdfunding, right? So in this particular session, we'll be mainly focusing on pre-seed and seed angel investors, and we'll be touching upon venture capitalists as well, right? Here on the screen, you can see some of the great startups that we have seen over the past couple of years, maybe more than a decade also. Here you can see Deliveroo, which is a major company in UK, which is responsible for delivering food to its customer. Then we have Monzo, sorry, which is a digital bank. You can also call it a neo bank, in the sense these people don't necessarily have a brick and mortar business model like banks in India, let's say SBI or Axis banks have, right? And then I think it's needless to say about Airbnb and SpaceX. These two companies have been kind of transformative in their own industry, how kind of disruptive in their own industry, and how they have created a space and name for themselves within this particular industry. And then how we can forget about Indian startups, India being the third largest country in terms of the number of startups that we have currently after USA and China. We have seen these companies evolve right from a basic simple idea to a really mature public companies, right? You can see Flipkart, you can see Ola, and you can see Zomato. I don't think uh, there is any need for me to exaggerate on the level of output that they have delivered to the Indian economy, right? So now let us look at different stages of startup, right? So just like I said, we as human beings, we undergo certain uh, phases of development within our lives, right? We are newborn babies, then we tend to become toddlers, and then we are kids, teenagers, adults, and then we grow old, right? So in the same sense, startups also have their stages of growth, their stages of development, right? So from the top, two stages, two things that you can see on the screen, which is the ideation stage and the pre-seed stage. I'll elaborate more on these stages in a while. So these are the two prominent stages in which I've worked with a lot of entrepreneurs and founders of startups, right? So the ideation stage is basically, let's say you have a particular business problem in your mind, right? Basically, here you do not necessarily have a fully developed product or a business model, right? So at this stage, basically, your source of funds, your source of money can be from your own personal savings or from your friends and family, right? Moving on to the pre-seed stages, this is a stage where you could have a prototype, right, or a MVP, right? So basically, let's say tomorrow I want to start a social media app just like Facebook, right? So to start a particular app like a social media app like a Facebook, I do not necessarily need to have all the features, all the topmost features in the pre-stage itself, right? So what I can do is I can develop a minimum viable product. Basically, this can be a social media app with bare minimum features. Let's say, for example, where you can upload your pictures, where you can upload your videos, where you can like, comment, and share and stuff like that, right? And basically, as the company keeps on growing months after months, years after years, I can keep on adding more sophisticated features. I can keep on adding more sophisticated algorithms to make it a mature product, right? And then at the seed stage is basically where you have validated your idea with some user traction, right? So for those who are not aware of the word like traction or validated, we'll slowly uncover these concepts as we proceed in the session. Again, just to want to speak about the last three aspects of stages of startup development. There is Series A, right, which is typically in this particular stage, the funding that the startups get, they're basically used for scaling the product, right? So what do we mean by scaling the product? So let me give you a very very simple example. Let's say hypothetically I own a coffee shop in a town in Karnataka, in a city in Karnataka, and let's say there is very little competition to the kind of coffee that I am offering to my consumers, right? So let's say I have employed few people in my coffee shop to make the coffee and serve it to the customers. But now to scale, because of the excess demand that I'm getting from my customers, I need to ramp up my production very quickly. I need to become efficient very quickly, right? So now what do? I could basically take this business idea to an investor and pitch them about this company and try to get more funding so that, let's say, I can buy automated coffee making machines, which would drastically and exponentially improve my efficiency, right? So this is Series A, where startups seek funding to go to different markets, or maybe to scale their products and to maybe optimize their product or service. Then comes Series B, that are already well established and have a strong user base and consistent revenue stream, right? So please be reminded that for us, if you want to qualify for a Series B funding, you need to show consistent revenue stream. Okay. And then last but not the least, I think we have seen this a lot of companies in India which have went public. So basically, the company's stocks or shares or whatever you would like to call them, they are traded publicly on a stock exchange, right? So initially, what used to happen is you used to approach private investors individually, but now when you become public, you've become so big. What you do is you trade your stocks, you buy and sell, you let people buy and sell your stocks on a stock exchange, right? So these are the different stages of startups. But like I said, primarily going back to the slides, I have worked a lot with ideation and pre-seed stage startups, right? So here comes the main crux of the session. Basically, the different components that needs to be in your pitch deck, right? So we'll try to uncover one by one as to what do they mean. Again, just want to clarify that you might not necessarily have all the information that you would like to present in a pitch deck, but it is advisable that you have these set of information that you can present to an investor so as to increase the probability of you getting a funding, right? So basically, in no way I'm going to guarantee that if you follow this particular methodology that I'm showing you on the screen, you will get funding. No, that's nothing is guaranteed in this world, I think, apart from death, right? So there is no guarantee, but this will sure shot increase your chances of getting the funding. Okay. So what do we have is, it's needless to say that you need to have a title slide, right? Many a times I've seen entrepreneurs come to me with a pitch deck, but unfortunately, some of the times I've seen that they do not necessarily have their logo, their tagline on the title slide, right? So it's very important for you to present the name of the company, your name, your title, whether you are a founder, whether you're a CX or somebody else within the company, and also the contact information of your company, right? It could be a website, it could be a WhatsApp channel or a LinkedIn page. You need to have these on the title slide, right? Here comes the interesting part. So I'm sure some of you might have already heard about elevator pitch, and this is one of the important slides that needs to be there in the pitch deck document. Okay, so basically, what is elevator pitch? Elevator pitch basically means that let's say if you are in a very tall building, which is 30-40 storied building, floors building, and you encounter the CEO of the company who works there, and you want to work there as well, right? So it's basically said that for an elevator to go from the ground floor to, let's say, the top floor, it takes certain number of seconds and certain number of minutes, right? So within that, you have to pitch yourself, you have to market yourself to that CEO as to why he or she should hire you for their company, right? So basically, the elevator pitch is going to be a condensed form of your entire pitch deck, right? So I've seen a lot of entrepreneurs, I've seen a lot of founders who've come to me that they just start with the title slide and then they quickly go to what the business problem. That should not be the case at all, right? So the elevator pitch actually helps an investor in getting a grasp of your entire pitch deck within, let's say, 1 or 2 minutes. It depends on you how many minutes you want to spend on the elevator pitch slide, but ideally I would say 1 to 2 minutes is more than enough, unless you're a seed B or a IPO stage company where you need to explain a lot of things to your investors. But I think 1 or 2 minutes should be fine, right? So let's look at what do we need to say in the elevator pitch. First of all, the problem of the startup that you're going to solve, right? A brief description of the product or service and how it addresses the business problem that you're trying to solve, right? And the third is the unique value proposition, right? So for example, if I'm making and selling coffees in my hometown, what would what feature would make my coffee unique to my consumers, right? And then I also need to mention the target market. Who am I targeting? Am I targeting youngsters who are crazy about coffee? Am I targeting, let's say, adults who are looking for a quick cafe kick in their bodies or something like that, right? And lastly, you need to have like a call to action, right? We have all seen advertisements throughout our childhoods where towards the end of the advertisement, the advertisers say, please hurry up and buy quickly because there's a 50% discount or something like that, right? So this call to action is basically a motivation thing to say to the investors when you want to get funding. Okay. Now let me quickly go to the second aspect of the pitch deck content, right? So here, as you can see from the screen, you need to be very specific about what kind of problem you're trying to solve as a startup owner, right? Because I've seen a lot of founders who get into entrepreneurship, who get into startups just because they want to get rich or just because they want to make more money. I don't think having such mindset would take such people very far ahead, right? So you need to understand the problem that is existing in the market, right? Maybe the problem can be in the nature of the demand and supply, right? So I particularly, if I had to give another example, I was in Belgium around 5 years ago for a university trip, and there was the time when I had the Belgium waffles for the first time, right? And it was my first time. I literally went very crazy, and I was in the UK for 3 years, but I had no idea about waffles. I was like having my pretty normal food over there, but then when I went to Belgium, I had the Belgium waffles. I was so crazy, I started looking for it all over in the UK when I came back from my Belgium trip, right? So there was a little issue in terms of the supply of Belgian waffles in the UK, right? So the problem was demand and supply, right? So not every store had Belgian waffles to offer to a customer like me, right? So you need to talk about the business problem and you need to quantify the problem, right? We'll see in the later slides how we can quantify the business problem in the market slides. Sorry. uh, Again, how do you show the business problem, right? So it could be in the form of an evidence of demand. Let's say you get a, let's say you're manufacturing t-shirts and suddenly you get a lot of requests from your customers saying that, oh, we want t-shirts with cartoon characters printed on them for ourselves, or let's say for our kids or for our younger siblings or something like that. So you need to quantify that problem. You need to give customer testimonials, surveys, or questionnaires to your investors. Basically, you need to keep your investor engaged and excited about your startup, right? Then comes the next part, which is very important, I think, the business solution, right? So if not many bakeries, let's say in the UK, did not have Belgian waffles, then what would I do? I would particularly try to understand the problem and I would try to come up with a solution, right? I would say to the investor, okay, from now onwards, I'm going to make and sell Belgian waffles in the UK in this particular region, right? So here, what you need to do is you need to talk about the business solutions, right? So one way of doing that is you can talk about the unique value proposition that sets your solution apart, right? So basically you can say, of course there are a lot of bakery items in the UK, but we do not necessarily have waffles which consumers are demanding. And then also you can talk about the technology or the methodology through which you are able to offer your solution, right? Again, this is a very important thing. I have undergone a lot of rehearsals with my clients who are basically founders and entrepreneurs who come to me, and sometimes I feel they get too technical when they are explaining their business problem, right? So it's very important that you understand not all of your investors are going to be very technically capable, right? So you have to explain your business problem and your business solution in a way that it becomes very easier even for a non-technical person to understand it, right? uh, we'll discuss about the business model in detail in the upcoming slides, so I would not necessarily spend much time on this. So this particular thing is called the business model, right? So this I have accessed from the CFI website. You can go to Google and type CFI and business model. You will get access to this particular image. So here, what do we mean by business model? Business model is nothing but a representation of your business, right? So what typical models of fashion designers do? They wear the clothes of fashion designers and they present it to the world for the world to see and purchase the garments, right? So basically, the business model is also going to be your representation of the company. So let me quickly run you through the different components of business model. At the very left and top, you can see key partners. Basically, here you are going to discuss who are the people that you are going to work with. It could be your employees, your vendors, suppliers, delivery boys, anybody basically, your people who invest in your company, right? Then comes the key activities, like what activities you are going to do, what processes you have set for yourself, stuff like that, right? Then comes key resources. Again, if we go back to my coffee shop, then I could talk about what resources would I be using. Would I be using automated coffee making machines, or would I be using manual labor to make coffee, different cups of coffees? Fourth one is value propositions, right? How different is the product or service that you're offering, basically, that you're going to talk about. Then comes customer relationships. Here basically you're going to talk about how your customers are segmented differently, right? Maybe you have customer segments based on gender, based on age, based on location, based on preferences, right? And then you're going to talk about channels, how you're going to sell your product or service. Is it going to be a digital channel? Is it going to be an offline channel, or a combination of both, right? Again, customer segments is more or less the same that we discussed in customer relationship. Basically, here you also talk about how you're going to interact with your customers, right? Because just because you end up selling a product doesn't mean that the relationship with your customer ends, right? Here you're also required to force the relationship with your customers so that they do not change the brands, right? So that you retain the customers for a long run vision. And at the bottom, two very important things that investors always pay attention to is the cost structure and revenue streams, right? Here you need to be very transparent and honest about your cost structures and revenue streams, right? So it's very important to be honest, because even if you try to fake it, some of the other day your investor will realize that you're trying to uh, falsify the data, right? So you have to be very honest with the cost structure and as well as your estimated revenue projections. Now comes the part where you need to understand your market, right? So if you just go through the screen, you can see that TAM, SAM, and SOM are different set of market estimates based on which you can understand how much you're going to sell to a particular customer segment, right? So TAM being the biggest number, SAM being the next, and SOM being the least biggest number, right? So let us try to understand what TAM, SAM, and SOM mean through an example, right? So suppose if somebody wants to create a startup in online education platform, then TAM is the entire online education market in the country, right? Then the SAM would be the online education market in India that is accessible only to perhaps, let's say, English speaking regions only, right? And then the last we have the SOM. So SOM is basically service obtainable market, where we realistically tell our investors as to how much of the market we are able to capture given the competition that we have. Okay. And then competition landscape, again, it's a very easy thing but also a very important thing to do. It's basically you defining who are your competitors in the market, right? It's basically the analysis of your competition. If you're manufacturing, let's say, headphones, you give a list of companies which are manufacturing and selling headphones in the area that you want to sell, and then you give your investors an idea as to what are the different set of features that are being offered by your competitors, right? And based on that you can segment your products, right? uh, Fine. So okay. So again, it's one of the most important things that I've observed uh, in some of the startup founders is obviously I understand that startup founders, they take their startups as their babies, they treat them as their own babies. So they tend to get very protective of the business idea, and then they say, oh, I absolutely have no competition. Again, it's a very concernable thing to say to an investor, that you do not have a competition, that you do not have any weaknesses. So again, it is advised that you also do adequate research about your market and present facts and figures about your competitors in the competition landscape slide. Then we have competitive advantage, right? Something which you can talk about in terms of, let's say, if you're offering a very unique feature to your consumers, right? You can talk about competitive advantage, right? It could be also, as you can see from the screen, a intellectual property, right? For example, if you're a, let's say, vaccine manufacturer of a very rare disease, you can possibly put it as a competitive advantage for your startup, or even high switching cost, right? Because if it would cost your customer more amount of money to switch to a different brand, then definitely you can put it in your competitive advantage slide. Okay. Now comes one of the most important parts of the pitch deck, which is traction. Traction is nothing basically for any mature company. Let's say traction could be anything that shows progress or growth of a particular company. Let's say for Flipkart, for a company like Flipkart, traction can be what? Revenue and profits, right? Or let's say the number of customer orders that they're getting on a daily, weekly, or monthly basis, right? So the kind of startups that I've worked with, which is pre seed stage and seed stage startups, it is very difficult for them to show revenue and profits because they have just started their entrepreneurial journey. So what do you do in that case? Basically, you show interest that you're seeing on online websites, or let's say number of apps that people have downloaded of your company, or user signups. So these can be some of the ways through which sorry, you can show traction to your investors, right? Again, this is one of the most important aspects within the traction category, is how you're going to approach the market, how you're going to sell your product, right? Again, we've briefly covered this in the business model slide that we saw previously, but let us also try to understand what is it in detail, right? So one of the way you can approach your market, your customers, is through using different social media platforms, right? Either you could right now it's very popular for brands to collaborate with influencers, so you can go with partnerships, or you can go with content marketing, right? Or you can also have a sales strategy that outlines how will you sell your product, right? Whether it is direct sales or a freemium model or through distributors, right? uh, Now, I understand we are running out of time. I'll try to finish quickly. And try to take questions also towards the end. So please bear with me for a few more
Not an
minutes.
issue. Please go
So again, yes, Toyota.
Not an issue, sir. You can go on. We have till 3.
Okay, fine. That's great. I thought we had only time till
Yeah, I mean, we
2:45
can
then.
extend till 3, and at 3, we have another session.
Okay. Okay. Thank you, Loyota. So, in the financials section, right? Uh, Again, one of the important aspects of a pitch deck. So here you need to be specific about what amount you're trying to raise, right? You just cannot be saying that, oh, I need some money between, let's say, 55 lakhs to 62 lakhs. This kind of shows uh, that you're not as prepared as you are when you go to meet a investor, right? And then also you need to have clear financial projections, right? Like how much revenue you are expected to earn, how much profits you are expecting to earn, right? Retain or something like that, right? So you being a pre-seed startup founder, or let's say seed startup founder, you also can, what you can do is you can show stuff like pre-sales, right? Or let's say you've raised some money through crowdfunding, or let's say you've got some grants from the government for your idea. Definitely you can show that as well, right? Because I've seen a lot of times where founders tend to hide such information because they want to get higher money for their startups. So please don't do that. Be very honest and open about what has your financial track record been so far, right? So like I was saying, it is a little difficult for pre-seed startups, or let's say even seed startups, to show traction, right? So in that sense, you can show a proof of concept, right? So in that sense, you can also show strong interest from potential customers, right? So let's take an example of space tech, right? Space tech landscape in India is growing massively since the past couple of years, right? So in case if you do not have enough traction to show to your investors, what you can do is you can show interest from customers, right? Maybe you can show the website traffic that we saw in one of the previous slides. Maybe you can yeah, I remember seeing this episode from Shark Tank very recently, where this particular group of entrepreneurs who had this particular type of calculators for MSME companies, they were, I remember seeing them tell to the investors that they had seen a lot of virality in their content, right? In the sense that their content had gone viral, in the sense that could show interest of customers in your product, right? So you can show that any quantitative objective number which you think can help influence your profits and revenues can be shown as in the financials, right? So that is one of the things that you can talk about in financials. Again, here is a secret tip in financials, which I'm sure is not uh, pretty much evident in online spaces if you try to look for it. See, we try to make financial projections based on certain assumptions, right? So now let me go back to the very simple example of me running a coffee shop, right? So what resources would I need to run a coffee shop that I get from outside, right? Basically, let's say the coffee powder, the sugar powder, the milk, the water. So these are some of the main things which I might not be able to generate on my own, right? So I can't be, you can't be expecting me to go to the farm fields, grow my own coffee, come back to my shop, and then sell the coffee, right? So that would take me a really, really long time. So I would have to rely on certain suppliers and vendors to procure coffee from certain places. So I tend to project my financials based on those assumptions. So for example, if there is vendor ABC who is selling me coffee for a certain rate, right? So what would happen if tomorrow that particular vendor goes out of business for some reasons, right? For any hypothetical reasons, then my financial projections will be different, right? So this is the one thing that I see in the financials of startups, founders and entrepreneurs, that they tend to miss out on. They tend to assume a lot of things by themselves. They tend to believe that okay, everything will go very fine. They tend to paint a very highly positive image in front of investors, which investors tend to pick out at times, right? Because investors themselves are typically from a very mature background. So for example, if I had to take an investment for my coffee shop tomorrow, I would necessarily approach a person who has invested a lot of money in the coffee business. So he or she, that particular investor, would be knowing a lot about coffee businesses. So we cannot really blatantly just lie on their faces just based on our assumptions. So again, as you can see from the screen, it is always better to under promise and over deliver, right? So try to keep your sales forecast, your revenue forecast as modest as possible. I'm not saying you should always show low profits in sales, but they have to be very, very reasonable. Otherwise, the investor, they are very clever people, they will quickly find out that you're trying to lie, right? So again, this is one of the most important tips which I usually see happen a lot of time. Then obviously team again becomes very, very important aspect, whether or not a particular investor will invest in your company, right? So if, like I said, if you're a founder from a pre-seed stage, or let's say a seed stage startup where you might not have necessarily all the revenue and profits that you're dreaming of, then the only two things that would matter to the investor, apart from financials of course, is your product idea and your team. So if you're able to ace these three most important aspects of your startups, like I said, the financials, the product or service idea, or your team, then I think you have higher chances of securing startup funding. Sorry, right? So it is very important for you to show how your team members are going to contribute to your company, right? Any notable achievements that you can talk about, as you can see from the screen, any credentials of the team. Let's say you might have a team member who is very experienced in running a kind of business that you want to run. That kind of also instills confidence in an investor's mind, right? He or she will be thinking, okay, these people are capable. If I put my money in them, then definitely they're going to give me a good return, right? So again, here you can see for pre-seed startups, like I was saying before, traction can be demonstrated by team's ability, right? So for startups, traction may be shown through team's execution of a successful product launch, right? Like I said just before, if you have a team member, or if it's you yourself only who has enough experience in that particular industry or sector, then that's a great way to demonstrate to the investor that of course you're going to return the money to them, right? So I think we have concluded the session, hopefully before time. Thank you so much for listening. I know this is a very vast ocean. It cannot be condensed in a 1 or 2 hour session. So what I have done is I have left my details on the screen for all of you to see and refer. If you want to reach out, please do reach out to me. And if you have any questions regarding startups, regarding fundraising, we can definitely take this conversation ahead. And if you have any questions, I can take it from here.
Yeah, so thank you for that session, sir. It was wonderful. So we have
Thank you,
one
Lohita.
question here. They're asking for
Yes.
some tips for delivering an impactful pitch presentation.
Right. Okay. Great question, Lohita. So, see, one thing that I did not necessarily cover in this session is the storytelling aspect of your startup, right? What a lot of founders, owners miss out is the storytelling aspect of the pitch deck creation. They tend to mechanically speak about the company, which kind of makes them very mechanical, right? So it's very important to have a particular story that you can demonstrate to the investor in order to attract their attention. Plus, like I said, uh, your financials need to be very strong. Strong in the sense, I'm not saying that you need to have a lot of revenue and profits, but they need to be filled with a lot of integrity and honesty. And then you
Some
need to have a
prominent
good
figures, right?
sorry.
Do we have to show like prominent figures, like these are the profits, these are the expected rates, like that?
Definitely, definitely. Yes, definitely. You can show your efficiencies, your, let's say, your productivity through your financial metrics, right? And also, you need to have a proper understanding of your market, right? Unless and until, let's say, you are a vaccine manufacturer who is the only person who has this formula to this vaccine, then I think you'll be safe. But if you're kind of a person who is kind of making the same kind of product, let's say tomorrow I'm making the Facebook for India, I need to understand what is the social media market in the India or all over the world for that matter. Then third thing is, like I said, you need to be very well versed with the product or service idea. Yeah.
And we have another question here. They're asking how to measure the success for their pitch deck presentation.
Well, I think getting follow-up questions from investors is a good sign of success to begin with. So if you want to measure the success of your pitch deck presentation at the spot, then I think if investors tend to ask you questions back, then it only means that they're interested. Because if an investor is not impressed with your work, or if they're not impressed with your idea, business or market, then they'll probably say thank you, it was nice meeting you. I think that's one of the first metrics. Second, I would say, is getting referrals, right? Even if this particular investor is not interested, he or she might be able to redirect you to some other investor that they know, who they think will be interested to invest. So I think that could also be calculated as a measure of success. But then the ultimate success is the your ability to raise funds.
Yeah. And another question is, what role does storytelling play in these presentations?
Right. So the thing is, like I said at the very beginning of the session, that we all have certain misconceptions regarding startups. So right now, some people think that startup is your way to become a millionaire. Of course, it is. I'm not saying it's not, but that should not be your only sole purpose for creating a startup, right? So let's say if you're passionate about a particular problem, right, and if you really want to solve it for the people, if you want to add value to people's life through your product or service, then that makes a great basis for the storytelling for your startup. So if you're able to connect those dots as to what you experienced in your own life and how you ended up creating this startup and how you're passionate about this startup, then I think that storytelling part will definitely add weightage to your funding ask. Because if it's just mechanical, if tomorrow if somebody goes to an investor and says, oh, I want to become a billionaire, which is why I want to make the Microsoft for India, then probably that's not going to work out. So you really need to have your own stories. Yeah.
And thank you, sir. We have few other questions, but we are running out of time here.
No problem. They can definitely reach
Please
out to
reach
me on
out,
my
sir,
LinkedIn.
on LinkedIn, or else you can contact sir through our website as well.
Definitely, Lohita. Thanks a lot for organizing this session and being a great host, Lohita.
Thank
Thank
you
you.
so
And
much,
thanks
sir.
to the audience.
Thank you for your time here, and thank everyone for attending this session. It was really wonderful getting to know this topic. I really think it is
Thank
a
you.
very helpful topic. So
Thank you, Lohita. It's my honor.
thank you, sir. Hope to work with you again in the future. Thanks a lot, sir.
Sure, same here. Thank you very much. Same here. Thank you. Thank you all.